Okay, hi. Well, this is, let's say, a new situation for us since we've not been at an event before like this, so hopefully our video doesn't have to be erased a year from now. No, we are a little bit different animal than most of the people here since we're not a fund. The money we basically spend come from a couple of exits that I have done as an entrepreneur. And we basically enhanced that money with, let's say, friends and family network plus the European Angel Fund money. So the European Investment Bank has a vehicle that basically doubles up money from investors like ourselves. So see us more as a bunch of entrepreneurs that basically want to share our experience and, of course, spend some money on the way to make some other businesses happen. Maybe starting that, I'll start with an anecdote. And when I set out to start my first company, it's a company called Tintech, Munich, London, Singapore based, around 250 people today. I was looking for money, and this was 2001 in telecommunications infrastructure. Now, if you guys know what happened in 2001 in telecommunications infrastructure, nobody would even answer an email because nobody thought that this was worthwhile looking at that industry at all. Now, in the end, I wanted to raise 3 million. I raised 0. Nevertheless, we started the company. We bootstrapped it. It was profitable 3 months later, which was a very lucky strike. But frankly, that was the best investment I've ever made, is not taking venture capital money. So I think one of the most important things when you think about VC money is think about, sometimes I have the feeling many of you think of it as a means to an end. Or as an end by itself. Sorry, it's only a means to an end. So what you want to do is build up a profitable company in the end. And if venture capital is something you need, it's a useful instrument. But there are others. And the best instrument in the end is basically not to take venture capital money in, because in the end it's going to be expensive. So I think that's just a caveat. I'm, of course, preaching against my own trade, but I think it's really important that you guys understand that there's a whole bunch of instruments out there. And sometimes I have the feeling, I've been around 99-2000. And 99-2000, you had people coming, sort of coming around and basically saying, I've started something, 3 months down the road, I get some angel money, 3 months later I get venture capital money, basically everything's for free, and they call themselves entrepreneurs. Well, entrepreneur has to do with taking calculated risks, and has to do with the fact that, I take some risks in order to achieve something. And for us, it's extremely important that anybody that comes along also takes some risks. We don't see, and this is happening again, in my opinion, sometimes, that money is far too cheap and it's too easy to get. It's very important for you guys to really think also about what are the downsides of these things, and do you want to get into these things knowing the downside. What we don't want is people that believe building a business is a free ride and is basically something that is not going to take sacrifice. It will, because first of all, it's going to take much longer. You always see those success cases out there. I don't know, the city deals and Groupons and everything, where everything is valuable 2 years down the road. But fierce reality is, even if you get venture money, it's going to take years and years to build a good company. A good company takes 5 to 10 years to build, despite the fact that you need venture capital along the way. So think of this as a marathon, and don't think of this as a short-term stretch. And also think of us, if you get in bed with us, this is a long-term marriage. And you really need to think about the consequences of that. So basically, having said that, having not taken venture capital was financially a very good investment back then, but also it was a big risk, because there is a lot of value in having people on your side. Having people on your side that basically help you taking tough decisions. On the other hand, think of it as an instrument. Number one. Second anecdote, in 99-2000, I actually brought a company public. And, I was 28, had tons of share money, which I thought made me really rich and everything. Well, in the end, as you guys know, the markets went down in 2000, and basically all of this stuff was then worthless at a certain point. So I think timing is also a very important question for you guys. Sometimes it makes sense to basically build something solid and not to take a lot of money in. Sometimes it makes sense to take the opportunity, take venture money in, and basically go for the big ride. But not in all cases. So I think one of the things you guys really need to think about, what's your scenario, where do you want to drive, and not let yourself be pressured by your surroundings because you believe you need to take in a lot of money. That's the second thing. And I think the third thing is also in terms, the last company I used to be responsible, and that's how I came to Berlin, for Nokia. For Nokia's mapping business. So I created something called Nokia Maps, and we actually did an acquisition here in Berlin, a company called Gate 5. And this whole acquisition almost failed based on a very simple thing, on a very early licensing agreement that these guys had done with a US-based company. And our legal guys almost didn't allow this transaction to go through because they did some mistakes early on. So I think one of the values that our trade, the investors can bring to the table is basically that they help you structurally set up your business, that it is due diligenceable for exit. And I actually believe that's one of the real values that experienced investors bring to the table. Having said that, just a couple of words about ourselves. Patagonia Capital, we're based right across the street from Hackische Markt, so if you guys are ever there, drop by for a cup of coffee. We do primarily B2B businesses. We're very well connected. Our last deal was a deal with Deutsche Messe AG, the largest European fair exhibition company. We built a company together with them, which we resold to them just a couple of months ago. So we're pretty experienced on the B2B side. That's our focus. We do deals, let's say, as small as a couple of 10,000 all the way up to 500,000, whereas on the high side we would take in what we call club deals. We would take in our network in addition to our own money. We believe we're fairly entrepreneurial, help you with our network, and usually we see ourselves as something like an institutionalized angel investor that is basically earlier than, let's say, the guys that would put in a couple million. If you guys have good ideas, our doors are always open. Thanks a lot.
All right. Thanks so much, Ralph.